back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. I've got my little daughter running around. I'm sure you can hear her. So I may have to, speak to her here and there. You may hear her scream at me because that's what she likes to do nowadays. But yeah, I wanted to go over this trade that I took today on Monday on the US100. All right. We're going to go over it real quick. We're going to keep it simple, basic stuff here. All right. For me, this was more like a nail and bail opportunity in the session. I woke up late today, okay, which is something I need to work on. Today was a great day for trading. If I would have been up on time, I maybe would have made, you know, 4 times the amount of money that I made as it is. Okay. So that's something that I need to work on in my own trading, my own discipline. I need to get to sleep on time so I can wake up on time. That's always been one of my biggest struggles as a trader. Okay. Is getting up on time and getting to the screens. Right. So either way, and I'm telling you all that because I don't necessarily suggest that you take a trade like this. But once you know what you're looking for, you're going to be able to take some trades. You know what I'm saying? Regardless of the time you wake up. And I still use the timing rotations as I should and all that, right? But I want to go over this with you. So you can see here, I have this marked off. We had a close and breakout on Friday. That's our signal. Now, there's two scenarios that are going to happen when you have a close and breakout, okay? The market is either going to, and I'm talking about for a day when we're going to have a good trade. Okay. Anything could happen after a close and breakout. But I'm saying if we're going to get a good trading opportunity, there are going to be two potential scenarios that happen after a close and breakout. Okay. The first one is we may close and breakout. Then this market may hold volume up high. Okay. And work into these highs before dumping down. Okay. The other scenario is just like this, where we close and break out, then the market dumps, coils for the pump. All right. So that was the signal, the close and breakout. That was my thought process when I saw the close and breakout. I'm like, okay, I'm going to be looking at this thing. Now, when I woke up, all I did was use the simple master pattern of peak formation, higher highs or lower lows on the inside, okay? And that's what we're going to be taking a look at here. So you can see we have our peak formation high in Tokyo, peak formation low in the Tokyo-London gap time, okay? And now here are our potential higher high on the inside here, okay? So what this means is this market may be shifting, right, from bearish to bullish. Okay. We've been going down. We've just been putting in lows and then we stopped putting in lows here. We potentially lock in this low, right, and go higher. And like I said, I woke up a little bit late. There you go. I woke up a little bit late, so I was not able to take advantage of this dump right here at 9:30, 9:45. But you can see these higher highs in London are taken out in the New York session, right? We put in a new higher high. So this market is putting in higher highs. Anytime the market is putting in higher highs, we are looking for a dump and pump. Okay. Does that make sense? We're putting in higher highs. When the market is going higher, it doesn't just go vertical straight from down here to way up there. Okay. It does a little stair stepping pattern, right? Where it's going to go up a little bit, then go down a little bit, then go up a little bit more, then go down a little bit. Okay. So we are just waiting for the market to pull back to or through that EMA, coil sideways for a minute or two. You know what I'm saying? For the pump. Right? And so this is how you use the master pattern. Step 1, step 2, step 3. Now, the step 3, my friends, is not necessarily completed when we just have higher highs on the inside. I want to see those higher highs broken. All right? Because that's what tells me we're still putting in new highs. All right? So this was my entry. This was that initial 945 dump down into the lows for that pump up that breaks through those higher highs in London. Okay. So when that happens, this market coils sideways and then starts to dump back down. And where does it dump to? Right? Right back here. The market often will dump back to where the breakout originated. Okay. So we broke those higher highs right here. This is the push that's responsible for that. Then the market pulls back in here, right? People were getting in here buying, okay, buying low. This market trades back against this move to stop out traders who are still in this market, maybe trailing their stops on the way up or whatever, right? But you can see we dump below that EMA. This is a 1 minute chart. We dump below that EMA, right? And then right here we cross again. Then the market dumps a little bit, coils sideways for that pump up. I actually got in a little early, right around where we first broke through that EMA again, okay? And I just got lucky with the stop loss. I use it, relatively speaking, the same type of stop loss every time, 20, 25 pips. All right. I don't want to take a lot of risk here, especially, with the size I'm putting in sometimes. So I want to keep it, uh, you know, pretty close, but that was very close. Okay. Now, I would have loved to hold this trade until we took out those Tokyo highs. But why would I need to do that? Okay. I shut this thing down at 77 pips. Once I saw us take out these highs, coil sideways, I'm out of here. Okay. I'm out of here. I'm going to take my 75 pips and run. All right. Because I already feel like I'm doing something I'm not supposed to when I'm making money out of the markets. Okay. It kind of feels like slightly illegal or something like that. Like I feel like someone's going to come knocking on my door and be like, hey, you know what I mean? That's just how it feels. Like we got cheat codes or something, okay? But this was the simple trade that I took today. And, I could have held it while it pulled back into my entry and then continued higher. But like I said, why would I do that? Right? I'm trying to get in there. Since I woke up late, I'm just looking to take sort of like a nail and bail opportunity. You can see this market just, exploded right here. So I'm just going to take the money and run. I'll come back next time, right? Anyway, man, I hope that this simplifies things for you. All right. Now, again, you can see, right, the master pattern, the close and breakout, and we have our step 1, step 2, step 3 for the dump and pump. All right. It's as simple as that. Now, if you look here, even in this Tokyo session, sorry, this baby's getting into all sorts of stuff. But like, for example, we're in this Tokyo session. This market has dumped down. We busted through all these lows, right? So we're putting lows in. Every one of these 15-minute candles is putting a new low in. So we're going lower. So while we're going lower, okay, then we're looking for pump and dump types of trades in the session. You can see right here in Tokyo, near the end of the Tokyo session, we pump up and dump. It's just a simple pullback, right? And then as soon as we hit right here, we put in these new highs, we know that we are looking for dump and pump. But if we're going down, if we're still, you know, whatever you want to call this, on the back side or the front side, whatever, as long as we're on that side, we're looking for pump and dump. But when we're going up, we're looking for dump and pump. Keep it simple. Keep it simple. All right. Anyway, man, until next time, I hope you continue to free your mind.